the S&P started off a new week with another good run to the upside, led mostly by the mega cap names in the NASDAQ 100, specifically 7 of the 8. There was one in particular that did not do so well today. But the rest of them are doing pretty well in the NASDAQ 100 as a whole, considering that those 8 companies, now including Broadcom, make up a large percentage of the, not just the NASDAQ 100, but also now the S&P 500. But they're continuing to lead a very narrow move. The Dow Jones Industrial Average on an 8-day losing streak now. The Russell 2000 bouncing up a little bit today. So there was some ups and downs, but a pretty decent move to the upside in the volatility index on the VIX, despite the move higher on the S&P. So, and again, very small range, kind of following the theme that we've seen for a long time now. So interesting move in the markets, continuing a similar pattern that we've seen for a while. Again, with a lot of these sectors, the XLY, XLY in particular, really kind of starting to go parabolic. In fact, one of our trade idea for the day comes out of the consumer discretionary market. So we'll talk about how to trade that stock. Itself is not going parabolic, but is starting to turn pretty strongly bullish after having been bearish for most of the year. So the market, the move is having its impact on a select number of companies, whereas the broader market as a whole is, from advanced decline perspective, from every other breadth measurement is looking relatively weak. So we'll break all that down in today's video. So let's go ahead and get started. Today is Monday, December the 16th, 2024. This is the Market Outlook from MarketScholars.com. My name is David Settle. Before we get going too far, I invite you to subscribe to our YouTube channel. This icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Follow me on Twitter for more content between the videos. And join our Market Outlook Facebook group that we've created. Alright, if you're watching us here on our blog, check out some of these other things over here on the right, including our Market Outlook live video. It's where we take a look at old trades that we've done in previous Market Outlook videos and see whether we should stay in them or get out of them. We also take a look at, we also put on today's trade already before the market closed at 3:30 Eastern time there. Again, you can just click on this and it takes you there. Click on this heart icon, it takes you to this page. Click on the like button there. Same thing here, clicks at some thumbs up icon. It opens up this page, scroll down to today's Market Outlook, click that like button. Again, the more you do that, it helps get our content out to all of our followers on these platforms. So thank you to those who do that day in and day out. Those who don't, you can do right now while you're watching with 1 or 2 really easy clicks. All right, let's start off taking a look at the S&P 500 with the market forecast indicators. You can see another really flat day, very small range. That range is extremely low as it is. The ATR is extremely low as it is. And that number is really, we're way below an extremely low ATR. So this goes to show what kind of range we're getting here. We continue to get. But the nice thing is the intermediate line has been bullish territory this entire time. A brief little dip into bearish territory, but for the most part in bullish territory. It's in this case at the 90th percentile. That's a good trending level. We're not very far above the moving average. So that's a little bit of a concern, but not a big deal. The near-term line has bounced up out of bearish territory. So there's one day. This is day 1 of the near-term line crossing above 40. Now we look forward to the momentum lines above it. That's a positive. It'd be better if it were above 80, the momentum line, but at least it's above it. So again, it's not the best odds of the near-term line getting above 80 tomorrow, but there's pretty decent odds because of the momentum line being higher. So we'll see. Now this one, again, the momentum line was higher, not above 80, and we didn't follow up with that. So that's, we'll kind of keep our eyes on that here tomorrow. The Dow Jones Industrial Average continued its losing streak. It's now on an 8-day losing streak. You can see the short-term sentiment remains extremely oversold. The intermediate line's dropping. Still in bullish territory though, but it's been dropping. It's below market sentiment. Obviously, we got that bull tag on Friday. We're still kind of building on it here today. The NASDAQ, which is the biggest mover, biggest reason why the S&P is so bullish, was up 1.5% today. It's up at 5% above the moving average. It's in the 92nd percentile of the past year. One of your bigger moves above the moving average that we have right now. Almost ended up with a cluster. The momentum line was the only one. It was above the 75th percentile, but didn't quite make it to the 80th. Would have had all 4 lines up there. In fact, we were kind of flirting with one more at the highs of the day. We kind of came off of the highs of the day by about 100 and I don't know, 137 points or so. No, excuse me, about sorry, not 137, about 37 points or so. So we were really, really close, and we finished pretty darn close as it is. And you can see, again, all-time high and kind of going a little parabolic, as you'll see here in just a second. The Russell 2000, which has been kind of following the Dow Jones to the downside, got the bull tag a day earlier than the Dow. It actually bounced today. Now, it didn't bounce, short-term sentiment still in bearish territory. We didn't bounce back above the moving average yet, so we're not out of the woods on the Russell, but at least it was up, right, versus the Dow, which, like I said, is on an 8-day losing streak, with its biggest losing streak it's had in about 8 years or so. So, and again, short-term sentiment's down. It's still in bearish territory, so we're not getting that crossover yet, and the Dow is more oversold. But this is kind of what we'd want to see, and it's a little concerning that again the momentum line it's even lower than it was that time. And remember, this is the time that failed and produced a bearish near-term peak. So we're even lower. We produced a more bearish low point than previously, at least on the momentum line. And then now the momentum line's not as high this time as it was last time. So the last time we broke out. So again, that doesn't necessarily mean that there's no chance that we get a bullish near-term peak, but the likelihood of getting a bullish near-term peak is lower. And again, that's leads ultimately to convergence, and ultimately leads into the intermediate line breaking down. So we'll see if that ends up being the case again by the end of this week, and especially we'll see if the Russell 2000, if this is just a one-day phenomenon. I'm kind of leaning in the camp that it is because of what the Dow is doing. And the fact that the intermediate line is crossed below market sentiment, and short-term sentiment is still bearish, but we'll see by the end of the week, especially if the S&P 500 produces that bullish near-term peak or not. Let's transition now into the long-term chart, and you can see again. Remember, we talked about the probability of having a transition candle this week. So far, we're still in convergence mode. The green line is still the purple line. We're still at the very extreme highs in the PPO, 92nd percentile. But at least we don't have a higher high yet, but at least we have a higher Hakinyashi close, 60-64 versus 60-70. So it's a smaller body, but it's a higher close, and we might be putting off that transition candle one more week. And it's the NASDAQ. The NASDAQ, look how big its candle is. The last 3 weeks have been pretty decent sized candles, to the point where the green line is still above the purple line for the NASDAQ. So very strong move there. Remember, your Dow is the one that had a transition candle last week that was bearish. We were still above the 10-week moving average, so we still don't have that red arrow yet. But it's a pretty decently sized bearish candle. And then finally, your Russell 2000, again, still doesn't have the red arrow yet, thanks to the move higher today. If we take a look at the 3 green arrow charts, you can see the Dow is a second day with 3 red arrows. The Russell 2000 still has 3 red arrows, while the NASDAQ has 3 greens and is not anywhere close to getting 3 reds. And then the S&P is kind of in the middle. It's got 1 green, or 2 greens. The MACD is in convergence mode, but we're also not that far above the moving average as we are on the NASDAQ either. All right, let's take a look at the 2-line version. You can see the S&P, again, still above its 17, even though its MACD is negative, so it's below its moving average. So again, that's convergence. That's a convergence. So that's not the case for the Qs. Pretty strong bullish trend. The MACD is getting up to pretty decent. We're going parabolic here, as you'll see here in just a second when we look at the DMI. IWM, a little different story. The MACD and stochastic, the 8 and 17 are close to crossing below the 30 now. Obviously, the MACD is negative. The stochastic's in bearish territory, and your Dow Jones clearly negative, right? Again, both those indicators breaking down to negative levels and well up above the value area for the Dow. So not a whole lot of support for it until if we were to fill in this gap from the post-election gap there. If I take a look at some of these other oscillators, the DMI is bullish still. We're above 25 and below 20 on the negative indicator. So the ADX is still above 20 even though it's falling. So you get the light green shading. The Qs, I told you, is starting to go a little parabolic. That's what I'm talking about, right? The negative indicator is back up above 35, working its way towards 40. But this time, the negative indicator is plummeting, right? It's down to pretty low levels. as a result, your ADX is about to cross above 25. One more day and it's going to cross above 25. So it's making a run. We're on a parabolic move to the upside. And, remember, parabolic, you either get a parabolic move at the beginning or at the end. In this case, you had it towards the beginning. Over here, you had it at the end. And we haven't had one until now, right? This is the first time the ADX is crossing up above there. The diamonds, remember, are struggling. You have a bearish crossover, but you're not too negative yet on the positive indicator, and your ADX is actually still falling there. So as bearish as the Dow is, that has got to be like the least bearish 8-day losing streak that we probably have ever seen. I would imagine. I mean, just guessing, not actually going through and looking at every one of them. But this might be I would assume that this is one of the least bearish 8-day losing streaks that we've had in a while. If you take a look at the RSI and the CCI, still bullish levels for the S&P. Of course, your Dow Jones, not so much. You're below the chart's midpoint on the Dow, but you haven't solidified it with a cross below 40 yet. See, we've been below 50 before a couple of times, only to bounce back up. So the CCI is a little deeper than those other two times. So we'll see if that makes a difference. If you take a look at the Ichimoku cloud, the S&P has it as an intermediate strength trend, nothing too major. The Qs, on the other hand, is working its way to mature. Like we have just crossed 5 and above 80. So we have now a mature level mature strength trend going on in the Qs. And your diamonds, remember, lost its trend yesterday, and now its rate of change is 26-day rate of change is actually about to go negative, barring a big update tomorrow for the Dow. Which, again, the 8-day losing streak, you would think that there's a good chance. When you're looking at 9 days, now, of course, tomorrow's a new day, it's its own independent day. But when you're thinking back here, in the next 9 days, how many up days are you going to have? You would have pretty decent probability that at least one of them would be up, and that would be obviously the next day. Let's take a look here at the Bollinger Bands and the Keltner channels. We are not in the upper quartile of the bandwidth, and we are not above the Keltner channel for the S&P. We are for the Qs, right? The Qs, we are in the upper quartile. We're up well above the upper Keltner channel. Momentum is spiking. So we've seen this like before, and we'll see if this, how parabolic we end up going on the Qs. The diamonds, on the other hand, again, is in the lower half of its chart, where the momentum is dropping rapidly. So a much different story that we're seeing on the Dow Jones Industrial Average. Looking at the intraday moves on the S&P, remember, again, we did get a higher high and a higher low, but we closed below yesterday's high slightly. And we still haven't gotten a new 4-week high point yet, so we've now crossed below 70. Remember, we have till the end of this week. Today, Tuesday, Wednesday, Thursday, Friday. So on Friday, the 4-week low is going to be right there. So it's going to be a really, really tight range if we don't start getting new highs by the end of the week here. Remember, and this is what it looks like on what this chart looks like on the stochastic. So still pretty strongly bullish on the S&P. Not the case for the Dow Jones Industrial Average. The Dow Jones, we are in bearish territory now. So we are not necessarily we're in the lower half of the chart. We're in bearish territory. We did close below last week's low point at the very end of the day. Lower high and a lower low there. IWM was one that has been weaker, and we've been getting pretty deep bearish lows. Not today. It followed the S&P, higher high, higher low, and closing just below yesterday's high. But we are also in the lower half of the chart for the Russell 2000. You can see both lines below 30 for the Russell 2000. If I look at the stochastics indicator here for the Russell, again, you can see, we were in bearish territory, bounced a little bit out of it. We're still below the average. The NASDAQ 100 is still extremely bullish, very strong. The moving average now above the 80th percentile. So pretty strong levels, but again, very, very small ranges, very small volumes. You can see the relative ATR is now below 0.72. It's extremely low. When I take a look at the weekly, this week so far, now, it's only one day, but, depending upon what the range ends up doing for the week, the weekly normalized ATR is really dropping pretty rapidly down to 2.06 currently. for this week, and of course the volume as low as it is, and the volume on the daily chart just continuing to go to pretty strong new lows. And this is the multiple times we've done this. We've gone down to new 1 year low points, right? We broke down here to new 1 year low. We broke down on the election to a new 1 year low, and then now we're breaking down again to a new 1 year low on the average itself. So again, a reflection of money flow, and money flow being not necessarily the strongest. You can see we are not in bullish levels anymore after kind of going parabolic there when we're down. The Qs, when you look at the Qs, because if we look at the ETFs, because they do have the the volume associated with them, we are still at pretty strong bullish levels. The diamonds, on the other hand, we are in bearish levels on the money flow. So we're clearly dropping there and not looking nearly as strong as we have a bearish pattern, to say the least there. Finally, if you look at the VIX, here you can see we jumped up today, up 6%. The S&P was up, the VIX was up. The VIX was off extreme lows that we finished at last week. We're really close to 100 on the VVIX. The correlation has dropped. So again, there's demand for the VIX 3M. The VIX was up, so there was actually demand for the VIX today. When we look at the skew, let's take a look at the skew here. Let's see if they've updated the chart for today. So the skew, this was 169.91. That's today's level, or 166, looks like 166.79. So that will be updated here tomorrow to 166. But still, you can see, look at the average. The average is skyrocketing to extreme. This is a 20-day average. And for that matter, if you look at the 50-day average to kind of get a little bit longer term view of the value of the skew. Again, the 50-day average back in 2021, we were up for so long, got up to 155. Well, now it's clearly above 155, the 50-day. Again, there's a lot of demand for deep out of the money puts. There's an extreme level of demand for deep out of the money puts. And again, last time we had this much demand, we had one last leg higher at the end of the year before a pretty decent correction, because of how big the valuations were, similar to the valuations we're seeing right now. When you look at the valuations for the S&P 500, were, the peak there in October 2021 was 38.58, so we're above that peak. Again, middle December, so we'll see what ends up happening. But still, that's we are extremely high. Like, it's the only third time that we've been above 38 ever in the history of the S&P. And the excess CAPE yield, which is kind of an inverse look at the, still remains at pretty decently low levels here. Was at 1.27, sitting at 1.28 right now. But, there's a lot. We're really, really overvalued. And there's a lot of different, I think the forward PE is at one of its highest overvalued levels that we've seen in a while. So there's, we are definitely, there's definitely a lot of demand for protection, and there's a reason why there's a lot of demand for that protection, as bullish as we've been and as narrow as some of this move has been. Now let's talk about what's driving the price action today, and pretty much it was like Broadcom and tech stocks. I mean, that everything else is kind of in a pretty tight range. But these NASDAQ companies, big outlier to the upside. Small cap started to, have a little bit of an outlier move. Real estate really dropped late in the day before starting the day with some pretty decent returns, but losing most of them and actually ended up with a loss. The dollar was down, commodities were down, yields were down. So that's your three-headed monster that actually was working in the favor. And I think for the most part, those asset classes, again, a strong dollar typically puts pressure on equities. I think that we might be peaking on the dollar. Now, that hasn't been the case. As you can see, we've had a strong dollar, and the S&P has been just fine. But generally speaking, a falling dollar is very beneficial for equities. Falling commodities tends to be beneficial because, again, it's a reflection of falling inflation expectations, and that's where the 10-year yield comes in as well. And the 10-year yield again, most likely is peaking because as we head into the FOMC meeting this week, pretty decent chance the Fed's not, is probably going to cut rates, but probably signal that they're done cutting rates. So your 3-month is priced in the rate cut. We're right at the 4.375 mark, so it's fully priced in. In fact, the 2-year, which is kind of the path, is only just marginally lower than that. So even the 2-year is not really suggesting that we'll get any more cuts. And you can see the odds from the futures market is, the odds for that next cut's really down from even a week ago when it was at 23%. It's down to only 16. So very unlikely the Fed will cut rates. And I know there's pretty decent chance that we'll get a rate cut, about a 55%, 57% chance that they'll skip January and cut in March. That's a pretty low number as it is, and it's down from where it was. A week ago it was at 66. Now, like I said, 57. But the Fed doesn't really do the, skip and then cut again. They cut because they need to cut. They do that. They do that for rate hikes because they're not going to raise it all the way up to some big number really fast. They're going to take their time. They don't really take their time on the rate cuts. You either cut when you need it or you don't cut when you don't need it, because generally the market's so bullish and so strong and the economy's running so well that you don't need it, and that appears to be the case, which should be a good bullish sign for the markets for the first half of next year to have these rate cuts taken. I mean, it will create some volatility, at least initially, but for the most part, we should have a pretty good, we should have it. In other words, another way of saying that is when those odds come off the table, we should get a new red tag, here. But then we should get a pretty good new green tag in the first half of next year, which would be obviously more than 5% gain, but probably will end up being double-digit gains. As you can see, most of the green tags are double digits when you're coming off of a 5%, at least a 5% decline. Because again, you don't get a red tag unless you've had at least a 5% decline there. So that's kind of the main thing. And I mentioned to you before, the breadth is still really, really bad. I mean, even among the Mag 7, like you've got some big movers. Microsoft is up, Apple's up, Google, Tesla's up 104% in the last 3 months. Meta's up 17. Broadcom's up now 52% because of the last 2 days. Amazon's doing pretty well. Netflix is doing pretty well, but AMD is dark pink shading in a red line. Adobe, since its earnings, is dark pink shading in a red line. Qualcomm's dark pink shading in a red line. And Nvidia has got a cluster today, an oversold cluster. So Nvidia, which has been the big market driver, has really not been moving the market hardly at all. In fact, when you look at Nvidia, here, let's look at the relative strength chart for Nvidia here. Let's try this again. So we'll pull this up, and then we'll pull up Nvidia. You can see it's well below its 50-day average on the ratio of the Nvidia to the S&P, and we are in that lagging category, and that's, you can see that's why XLK is the one that's least for over to the right. And that's what you're seeing here with XLK. We're the 8-day is crossed below the 17. We're dropping down, but you look at XLK and it's like, well, it's not so bad, but it's also not nearly as good as like XLC, which has been strongly bullish, or even XLY, which is going parabolic because again, XLY, Tesla especially is up 100% in the last 3 months since the beginning of September. Tesla's up 100%. That's one of your biggest companies in this sector. If you look at the ratio of the Q's IWM, you can see it's going relatively parabolic. It's positive. DMI indicators up to above 40. If you look at the ratio of growth to value, it's going parabolic. It's actually at new 52-week highs. Very parabolic move, very strong move on the MACD. You can see it's, we're well below 15, working our way down to 10, below 10 on the negative indicator. The RSI is up, above 75 now. In fact, when you look at discretionary relative to staples, you can see again parabolic move, big time parabolic move, big RSI, big move on the PPO, big move on the long-term PPO. We're above 45 on the positive. The ADX is almost to 45. And we talked about this when we get these big moves kind of out of nowhere, when it hasn't been outperforming, and now all of a sudden it is outperforming the markets. Then we've seen that before at the end of 2021, right? Here's XLK relative to SPY. Again, we're above the 50, not by much, and we're not above the 200 yet either. So we haven't really broken out there. The RSI is still at bearish peak levels, like we've been seeing here. The PPO is not very high. The long-term PPO is still actually negative. The CCI is not really bullish. So we're kind of missing. Remember, the three biggest companies are right here. Four, now quite a few more when you add. There's a lot of people have been talking about mega cap 8 when you include Broadcom in that. Broadcom is really working its way up the list. If you take a look at Broadcom here. Here is, let's see, market cap. We'll do market cap. So there's your big three all in XLK, and then here's your two XLY companies, Amazon and Tesla, and of course Meta and Google are your XLC. But look at Broadcom now. It's not above Google because you have to add these two together, but it's really close. It's the next $1 trillion market cap, and that's how close it is to catching up to Meta, and it's really taken off here. You can see, financial, Visa, MasterCard, JP Morgan, Eli Lilly, Berkshire's there, Exxon, Oracle. So the next company out is Oracle outside of, in those big three sectors is Oracle. And then you have Home Depot and the consumer discretionary, but Salesforce there's also in, and then T-Mobile and the communication service. And then you have a few more IT companies, but you can kind of get the idea. It's like the mega cap 8 is really like, especially when you add up these market caps, now including Broadcom, you're looking at, over 10 trillion right there. And then you're looking at, 1, 2, 3, 4, 5, almost another 10 trillion from these other 5 companies. So, that dwarfs the rest of these when you add them all up together. Just absolutely dwarfs the rest of the S&P 500 when you look at those 8. And like I said, Broadcom working its way, and that continues to be the big drivers here. All of these are, like I said, going parabolic when you look at their DMIs here. You can see, let's see here. Let's do this. Let's look at the DMI. And you look at Apple. It's a pretty good DMI, right? That ADX is rising. You got orange arrows down there on the negative indicator. Microsoft, you had one orange arrow, and that ADX is up, moving up higher. Amazon, you can see pretty strong bullish move. Broadcom we talked about, right? Parabolic move. That ADX is going to take a few days, but the negative indicators down, the positive indicators at one of its biggest levels ever. See Tesla, parabolic move. Netflix even parabolic. The ADX is above 40, so parabolic move. So a lot of these Magnificent Seven companies. So like I said, so much for the broadening trade, right? A lot of these Magnificent Seven companies, the only one that's not on a parabolic move right now is Nvidia, and that's because it's got a cluster. It's on a bearish intermediate trend. Like the market forecast chart for Nvidia, obviously the intermediate line is below the 20th percentile. You are in an intermediate decline right now on Nvidia, and yet the market is, and especially the Nasdaq 100, is on its own parabolic run. All right, and that brings us to our trade of the day is on Etsy. Let's pull up Etsy here. And you can see Etsy has been on a bearish trend for the bulk of this past year, and then now has turned it around. In fact, we've gone dark green shading the green line, and as the intermediate line crossed above 80, you got a cluster, which is a good sign. It wasn't the first near-term rally, but on the next near-term rally, and again, at the time that the intermediate line crosses above 80, you get a cluster that's a sign of strength, right? That we can get a pretty decent run going here. You're in the 90th percentile. You're pretty decently far above the moving average. When you look at a lot of these other charts, you'll see some bullish patterns here, obviously. Good bullish candle on the weekly chart. In fact, the Hakinyashi close now is above The 40-week exponential moving average, pretty decent sized candle down there. 3 green arrows. You obviously have 3 green arrows on Etsy and have had. In fact, you were kind of on the downward slope and then you popped back up here on the histogram. Look at the 2-line versions of this, and you are closing above the 200-day moving average pretty considerably, pretty easily. Big breakout move there. MACD and stochastics at bullish levels, and you had pretty decent volume today on that breakout. You also have some bullish breakout patterns on these other indicators. You're up to above 40, well below 10 already, so pretty strong trend. In fact, pretty mature trend across the board. You see mature trending levels here above 70 on the RSI. You're well above the positive 100 level. We got above there a couple weeks ago. The Ichimoku cloud, we have a mature or really close to mature level, strength level there. We're well above the cloud. Cloud's green. The rate of change is strongly positive, so very strong moves. And then you look at the Bollinger Bands and the Keltner channels. We're not above the upper band. The bandwidth's relatively high, but we are above the upper Keltner channel. Again, with some very strong momentum. So considering the strength of the trend that we already have, I didn't go too strongly bullish in this long vertical. Rather than sell the 70, be pretty aggressive. In fact, you would have got a 4-to-1 by selling the 70, but I stayed at the mid-30s delta instead, and just getting a little bit more than a 1-to-1. So again, a pretty good return compared to what we typically get for a bull put spread, but way less risk than what we normally take to get a bull put spread. So it's a little bit lower probability than your typical bull put spread, but I like the setup for a relatively higher probability directional trade on a stock that's already pretty mature in the bullish move that it's currently on. All right, well, that does it for today. You've heard from me now, and I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new thread with any questions or comments you have. Reply to anybody else's thread. Let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, comment on the video. Join us at MarketScholars.com for free. Follow and like us on Twitter and Facebook as well. Have a great rest of your Monday night, everybody, and we'll see you all tomorrow.